react to that very particular text that was sent in. Thanks, sir, for that, Kate. Now, it's been another bad day in a bad week for the stock markets. Major European share markets closed lower again today. Not as bad as yesterday's historic falls, but still enough to get the economists worried. Yesterday, the financial giant Morgan Stanley warned that the US and Europe were, quotes, dangerously close to recession. So should we be worried? Is this the news story that nobody really wants to run and cover, but which actually is possibly the most important one of the lot just at the moment? Let's get a word with Jonathan Davis, economist and wealth manager. Hi, Jonathan.
Hello, Adrian.
Hiya, and Howard Wheeldon as well, senior strategist at BGC Partners,
Hi.
the interdealer brokers. Hello, Howard. Jonathan, are you worried?
I think people have to be very, very worried. The economy is dire. Aggregate income is not rising, and yet because they borrowed all that money, they pummeled the currency sterling, which meant that our import costs went through the roof, which is the reason why our cost of living is going through the roof. Unemployment of full-time jobs are going down the pan. Part-time jobs and mixed jobs are going up. In other words, the economy is in a dire state.
But listen, Jonathan, Jonathan, people listening to this will know that from their daily experience. But I suppose the question is, will this dramatic plunge that we've seen in the stock market this week make any difference to that, either positive or negative? I mean, most people listening to this will not have a portfolio of stocks and shares, will they?
Well, first of all, you don't know that. But a lot of people, of course, have got money in funded pensions and individual savings accounts. Yes, those who have investments, it's going to affect them. Long term, people should not expect to make money out of the stock market, because I think the stock market is a busted flush. We're in another dot-com bust, possibly a 2008 bust right now. If it doesn't happen immediately, then I'm very sure that it's happening for the next year or two, because the economy is a busted flush itself.
Well, you say that. Britain has been described by leading members of the government as a safe haven. We haven't we haven't had our AAA status downgraded in the way that United States has.
We have
example.
£5.5 trillion of debt when you take into account balance sheet debt, government unfunded liabilities such as pensions, private finance initiative, and then you add on £1.25 trillion of household debts. We have a vast amount of debt, and that is because of this debt, whether it's in the UK or the US or right across Europe or Japan or wherever, it's because of this debt that economies cannot grow. It's because of this debt that economies are literally going bust. They're going bankrupt. Look at Ireland, Greece, Spain, Italy, etc.
All right, Jonathan, I want to get another perspective on this, because you're painting a very gloomy picture. Howard Wheeldon, I mean, it's all a busted flush, according to Jonathan.
Well, of course, there's a lot of truth in what Jonathan says. Debt across Europe, you can't ignore it. It is the factor and reasoning for the problems that we suffer. These are politically induced problems as well as consumer induced problems, of course. But what we're talking about here is the political element of it. If we look at 2008 crisis, if that was a crisis of capitalism, this is definitely a crisis of politics. Having said that, we have been here before, and with a little bit of hard work and effort, and understanding by the politicians of the seriousness and the gravity of the problem, we can and will get through this. We came through the 1930s. It was 10 times worse than what we're seeing now, for different reasons and different form.
I would suggest, Howard, that not many people listening to this will be entirely cheered by the notion. Well, we got through the 1930s.
Yes, well, we did, and we got through the 1960s, where fear was a far greater factor in people's lives than today. Jobless numbers were 10 times greater percentage wise than they are today, and we came through the 1990s, and we came through 2008 because we came together and understood the problems, and we worked our way out of it. Not perfectly.
Adrian.
Go on, Jonathan, yeah.
Adrian, I cannot believe what I'm hearing from a guy in the city here. The 1930s, as Adrian, you effectively implied, it ended with a world war. Do we really want to go through that again? As to 2008, the only reason why we got through it, if that's an appropriate phrase, which I disagree with, is because we borrowed, in effect, £1 trillion and handed it to the guys in the city, and the taxpayers for the next 20 years are paying for it.
I took from what I took, Jonathan.
They compounded the problem.
Jonathan, I took from what Howard said the notion that things may be bad, but they have been worse and they could be worse.
No, they haven't been worse, because the 1930s was created by a debt bubble, which was the late 1920s. The debt bubble we have now per capita is significantly greater than the amount of debt that they had in the 1930s. So no, the position is even worse than the 1930s, and that's what your listeners need to get to grips with.
Well, I'll tell you, Howard, please. Hold on a sec, Jonathan. Howard, please give us a glimmer of light.
And the economies that we're talking about are so much larger, and we've had globalization, that we are very, very different today than we were then. But yes, I readily admit there is a huge problem which we have to face up to, and we have to find answers to. Our politicians have to come together, because if they don't, this problem will get to the point where we do fall beneath the precipice.
Borrow more, Howard?
No, not borrow
do
more.
What can they possibly do?
What can they possibly do? Very simply, if we talk about Europe first, they have to accept that a one system currency does not work. We have to make a reversal. We have to have a split. We have to have a change. We have to have some form of either two-tier system or go back to where we were.
Howard, can I ask you?
Sure.
I mean, you're not talking quite the apocalyptic terms that Jonathan is, but nevertheless, you're admitting that we have a situation for our economy which is grave, I think. And what intrigues me is that
we don't have a system that for our economy is grave. We have a system, a problem in our economy here in the UK, which is very serious, but it is manageable, and the government is taking action.
But
to
if
bring
the rest of the world's economy is in meltdown, for want of a better phrase.
Well, the rest of the world isn't, of course, because the East is still growing. The East is doing, and we have this ongoing shift of economic power from West to East.
But most of our trade is done with Europe and is done with North America.
We have to adapt and change with the system, as we have always done in the past centuries. We have gone where the markets are. We have gone where the business is. We have to be flexible and change.
Go on, John.
Adrian, as Howard probably knows, in China, which has been the global economic powerhouse for the past decade, and certainly the last couple of years, there are 64 million empty, never lived in homes. 64 million. They have got the property bubble which you cannot even believe. And anyone who tells me that China isn't going to, at the very least, slow down its growth and probably at some point have a crash is in cloud cuckoo land.
Well, Jonathan, let me put the question to you then. I mean, unless we're all going to sort of go and live in caves somewhere and hope that the problem just goes away, what can we do? All of the conventional solutions that might be suggested, you appear to be ruling out. Is there any glimmer that you can offer us?
And that is the question that should be asked but cannot be answered. What I mean by that is everyone asks me, what can we do about it? And I say there is nothing you can do about it, because there's two alternatives to what's going to happen. Either governments are just going to print more money and borrow and defer the problem until they're out of a job, in which case we are going to go to super or even hyperinflation, which creates economic bust, or if they don't print, we're going to go into a debt deflationary spiral. In other words, there is no alternative to the outcome. My view is we are in a 20-year depression as we speak. In 1931, they didn't know yet they were in a depression. What we should do is hike interest rates now, cut the cost of imports, which means cut the cost of manufacturing, cut the cost of living. That would mean our standard of living would stay the same. We would become the most attractive nation on earth in which to invest, no doubt after a couple of years of severe hardship. But I'll tell you what, the only people who would be detrimentally affected by that would be the bankers, the politicians and the estate agents.
All right,
the rest of society would
Jonathan,
benefit long-term.
let Howard comment on that.
I'm afraid it sounds absolutely wonderful, and there's some of what Jonathan says is correct. But I'm afraid if we were to do that in the manner and the style and the timing that he would wish, we would end up with nobody would be actually employed. Wages in this country would have to be halved. And that is not bad. Our standard of living would have to fall.
Our standard of living would not fall because our cost of living would plummet and our cost of manufacturing would plummet, which means that our employment would rise.
We don't have any goods to sell the rest of the world. And that's
Germany has had an incredibly
yes, but it takes 20 years to create such a market.
Germany has had a strong currency for 50 years, and Germany is about the strongest country in the world.
All right,
now,
Jonathan
don't tell
Davis.
Me we couldn't do what they do.
Jonathan Davis, Howard Weldon, thank you. I'll tell you what, hearing that, there's some pretty sobering comments about the world economy and about the British economy. And we had a chat about this in the office beforehand, sort of saying it's the story in a way that nobody wants to do because it's about markets and it's about business and it's about share prices. But I'll tell you what, it is phenomenally important. We can't overstate the importance of that. And even if the news is gloomy, then I suppose you'd say it's better, at least, that we should be aware of it rather than burying our heads in the sand. Fascinating stuff. Jonathan Davis and Howard Weldon.